Welcome to WealthWise, your go-to channel for mastering personal finance and building real wealth. If you're new here, hit that subscribe button and turn on notifications so you never miss out on the secrets that could change your financial future. In today's video, we're diving deep into the secret to building wealth, with 5 proven strategies that have helped millions of people achieve financial freedom. These strategies are time-tested and have been proven to work across all industries and backgrounds. Whether you're a student, a professional, or someone just starting your journey in personal finance, this video will provide you with a roadmap to get started. But before we dive into the juicy details, let's take a quick reality check. Building wealth isn't a get-rich-quick scheme. It requires patience, hard work, and most importantly, strategy. The good news is these strategies are simple and accessible to anyone who's ready to take control of their financial future. Let's talk about something most people ignore in their daily hustle, the mindset shift required to truly grow your wealth. Before anything else, let me tell you something crucial. Wealth starts with your mindset. The way you think about money, the way you view opportunities, and the choices you make all come down to one thing, your mindset. So what's the difference between a wealthy person and someone who struggles financially? It's how they view money. Wealthy people don't work for money. They make money work for them. You need to shift from a mindset of scarcity to one of abundance. The world is full of opportunities. You just need to see them. Wealthy individuals understand that to truly get ahead, they need to think differently about earning, saving, and investing. Now that we've set the right mindset, let's get into the 5 proven strategies for building wealth. Strategy number 1 is a game changer. Start with financial education. It may sound basic, but trust me, education is the first step to wealth. You need to understand how money works, the basics of investing, saving, and budgeting. Whether you're learning about the stock market, real estate, or cryptocurrencies, knowledge is power. The more you learn, the more empowered you become to make smart financial decisions. Now let's talk about strategy number 2. Invest early, invest often. The earlier you start investing, the more time your money has to grow. One of the most powerful things you can do is to invest a portion of your income regularly, whether it's stocks, bonds, mutual funds, or real estate. Starting with small amounts can lead to massive wealth over time. But here's the magic behind investing early: compound interest. This is the secret weapon that transforms your small investments into large sums over time. Simply put, compound interest is the interest on your interest. The more you invest, the more your money grows exponentially. It's not about timing the market, but about staying consistent and letting time do the work for you. Now that we've covered mindset and the importance of investing, we're about to get into some real strategies that can help you build long-term wealth. But before we continue, let me know in the comments, what are you most excited to learn about today? How do you plan on implementing these strategies in your own life? If you're finding value in this content so far, don't forget to like, share, and subscribe to WealthWise. Trust me, you don't want to miss the next part of this video, where we'll be diving deeper into more advanced strategies that will take your wealth building to the next level. Now we'll talk about strategy number 3, the power of networking and building relationships, something that often gets overlooked but is absolutely crucial in the journey to wealth. Stay tuned for that. This is a crucial element that many people overlook. But trust me, this strategy can accelerate your wealth building journey like nothing else. We live in an interconnected world where relationships and connections play a massive role in success. You can have all the knowledge in the world and the best financial plans, but without a strong network of people to support you, open doors, and share opportunities, your potential for wealth is limited. Networking isn't just about collecting business cards or adding people on LinkedIn. It's about cultivating meaningful relationships with people who share similar interests, values, and goals. It's about surrounding yourself with individuals who challenge you, inspire you, and push you to be better. Let's break it down further. The right relationships can open up countless opportunities for growth. For example, having a strong network can introduce you to investment opportunities that you wouldn't have known about otherwise. You might meet an entrepreneur who needs funding for a new business or a real estate investor who is looking for partners. These opportunities often come through people you trust, and you can't expect them to find you. You need to actively build these relationships over time. Networking isn't just about making connections, it's about adding value to others' lives. When you help others succeed and share your knowledge or resources, they are more likely to reciprocate. So instead of focusing solely on what others can do for you, focus on how you can help them. Maybe you have a skill or expertise that can assist someone in your network. Maybe you know someone who needs a service that the other person provides. When you give without expecting anything in return, you build trust. And trust is one of the most powerful currencies in business and wealth building. Think about it this way. If you're looking to scale your business or make big investments, you'll need to surround yourself with successful individuals who have already been there and done that. A mentor who has experience in the industry you're entering can help you avoid common pitfalls, make better decisions, and even introduce you to potential partners or investors. These relationships can save you time, money, and countless hours of trial and error. Additionally, the right relationships can give you access to exclusive information or insider knowledge that can set you apart from the competition. Wealthy individuals understand that being part of a strong network provides them with a competitive edge, whether it's knowing when to buy a stock, when to invest in real estate, or when to launch a business idea. In other words, information is power, and networking helps you gain access to that power. Another powerful aspect of networking is its ability to open doors for your personal development. When you connect with high-level professionals, you're constantly learning from them, whether it's about their expertise, mindset, or approach to wealth building. These relationships expose you to new ideas, concepts, and strategies that you may not have come across on your own. Surrounding yourself with successful people not only motivates you to push harder, but also helps you stay focused on your long-term goals. However, building a strong network takes time and effort. It's not about attending one event or sending one cold email, it's about being consistent, showing up and actively engaging with others. You need to attend networking events, both online and offline, join groups, participate in conversations, and build rapport with the people you meet. Don't be discouraged if things don't immediately take off. Building relationships is a marathon, not a sprint. The more genuine you are, the more successful your networking efforts will be in the long run. And remember, networking is not just about professionals. Your personal circle, family, friends, and acquaintances can also play a key role in your wealth-building journey. Sometimes the best opportunities come from people you already know. They might introduce you to an investor, share a job opening, or recommend a mentor. Don't underestimate the power of your inner circle. Let's talk about some practical ways you can start building your network today. First, attend industry events. Whether they are conferences, seminars, webinars, or meetups, these events give you an opportunity to meet like-minded individuals who are also serious about wealth building. Be proactive at these events. Introduce yourself, engage in conversations, and follow up after the event to maintain the relationship. Second, use social media to your advantage. Platforms like LinkedIn, Twitter, and even Instagram are powerful tools for connecting with industry leaders, entrepreneurs, and investors. But it's important to use these platforms in a way that adds value. Share your insights, comment on posts, and engage with others in a meaningful way. Social media can be a goldmine for building your network when used strategically. Third, join professional groups or masterminds. There are countless groups, both online and offline, that cater to various industries and wealth-building strategies. Being part of these groups allows you to tap into the collective knowledge of successful individuals who share similar interests and goals. These groups often provide you with opportunities to collaborate, learn from others, and even find partners for your projects. And lastly, don't forget about mentorship. Finding a mentor can dramatically accelerate your learning process. A mentor doesn't just offer advice. They share their experiences, guide you through challenges, and help you avoid mistakes. The right mentor can be a game changer in your financial journey, so don't hesitate to seek one out. In conclusion, strategy number 3, networking and building relationships, is about recognizing the power of human connections in your wealth-building journey. The right relationships can provide you with the knowledge, opportunities, and support you need to reach your financial goals. But remember, successful networking isn't about just taking, it's about giving, helping others, and creating lasting, meaningful relationships. The more you invest in your network, the greater the returns you'll see in the long run. Now we're diving into strategy number 4, diversify your investments. And this is a strategy that cannot be overlooked if you want to build long-term wealth. When it comes to investing, many people make the mistake of putting all their money into one asset class or one investment vehicle. While this can work in the short term, it's a risky strategy for long-term growth. The key to securing your financial future is to diversify, to spread your investments across various asset classes, industries, and markets. Diversification acts as a shield against volatility and the unpredictable nature of markets. It reduces the risk of losing everything if one investment goes south and provides you with multiple streams of potential returns. Let's take a closer look at why diversification is so important. Think about it this way. Imagine you put all your money into a single stock or a single type of investment. What happens if that stock takes a major hit or if the market crashes? Your entire portfolio is at risk. However, if you diversify and invest in a variety of assets, stocks, bonds, real estate, mutual funds, precious metals, and even alternative investments like cryptocurrencies, your risk is spread out. If one investment underperforms, your others may perform well, balancing out the losses. One of the easiest ways to start diversifying is through index funds and exchange-traded funds, or ETFs. These investment vehicles give you exposure to a wide range of stocks or bonds, often across different sectors and industries, all bundled into one fund. With just a single investment in an index fund or ETF, you gain exposure to hundreds or even thousands of companies. This is a great way for new investors to start building a diversified portfolio without having to pick individual stocks. But diversification goes beyond just mixing up your stock picks. It also involves diversifying across asset classes. Stocks are a great way to grow wealth over time, but they come with high volatility. Bonds, on the other hand, tend to be more stable and provide a steady stream of income, but they don't offer the same growth potential as stocks. Real estate can be an excellent hedge against inflation, and it can also generate passive income through rental properties. Meanwhile, precious metals like gold and silver can act as a safe haven during times of economic uncertainty. Don't forget about alternative investments like cryptocurrencies, which are becoming increasingly popular. While they carry a higher level of risk, they also have the potential for high rewards. By investing in a range of asset classes, you can protect yourself against downturns in one market and capitalize on gains in another. Think of your investment portfolio as a well-balanced meal. If you only eat one type of food, you won't get all the necessary nutrients. But by diversifying your investments, you ensure that you're getting a healthy mix that will sustain you over the long term. It's also crucial to consider diversifying geographically. Many investors focus only on the markets in their home country, but global markets present massive opportunities for growth. For example, while the US stock market may be experiencing a slowdown, emerging markets in Asia, Africa, or Latin America may be growing rapidly. By investing in global stocks, mutual funds, or ETFs, you can tap into these growth opportunities and hedge against the risks associated with any single country's economy. It's a way to truly globalize your investment strategy and take advantage of opportunities that are happening around the world. Another aspect of diversification is in your investment strategy. Not all investments need to be high risk or high reward. Some may be focused on steady growth, while others are more aggressive and aim for larger returns. Balancing these strategies within your portfolio ensures that you can weather different market conditions. For instance, a portion of your portfolio can be allocated to safer, income-generating investments like bonds or dividend-paying stocks, while the rest can be invested in more aggressive assets like growth stocks or venture capital. This mix provides a smoother ride over the long term, even when markets are volatile. One more key point to keep in mind is that diversification doesn't mean you have to have hundreds of different investments. In fact, having too many investments can lead to confusion and make it harder to track your portfolio. The goal is to have a well-thought-out allocation across different asset classes and sectors that aligns with your risk tolerance and long-term financial goals. A diversified portfolio doesn't need to be overly complicated, it just needs to be balanced and well structured. A good rule of thumb is to reassess your portfolio regularly to ensure that it still aligns with your financial objectives. As your wealth grows and market conditions change, your portfolio might need to be rebalanced. This doesn't mean you need to panic during a market downturn or sell everything during a bull market. Instead, take the time to review your investments, rebalance your portfolio, and make adjustments based on your risk tolerance and goals. This is why it's important to stay informed about your investments and understand the fundamentals of the assets you own. If you're feeling overwhelmed or unsure about where to start, there are plenty of financial advisors and robo-advisors who can help you build a diversified portfolio that suits your needs. But even if you decide to manage your investments yourself, the principle of diversification should always be at the forefront of your strategy. By spreading your risk across different asset classes, industries, and regions, you ensure that you're protecting your wealth while positioning yourself for long-term growth. In conclusion, strategy number 4, diversifying your investments, is all about reducing risk and maximizing returns. By spreading your investments across a variety of assets, you protect yourself from market volatility and ensure that your wealth grows steadily over time. Diversification is a powerful tool that can help you weather economic downturns, take advantage of new opportunities, and ultimately build long-term wealth. So, take a step back and evaluate your portfolio today. Are you diversified enough? If not, now is the perfect time to make adjustments and set yourself up for financial success.